Felsman, branch manager and senior vice president of mortgage lending for a company called Rate. What's the main difference between financing an ADU and financing a home?
The number one main difference is that when you're financing an ADU, you already own the property, and there's legacy financing in place that these days, because we had such an amazing low run of interest rates during COVID, is probably something you don't want to disturb. So if you're purchasing a property, you don't have to worry about that. For better or for worse, interest rates are what they are, and you're going to go out there and finance the property with the loan that makes the most sense for whatever your down payment is, whatever your other goals are. If you're financing an ADU and you don't want to disturb that existing mortgage, then we have to look to something besides a first mortgage as the most desirable product, probably the most desirable way to access your equity and finance that ADU.
So if somebody comes to you and they want to build an ADU and they say, how in the world am I going to finance this? What are my options? How are people doing it today with these higher interest rates on the legacy mortgage?
I've always framed in my mind the financing options for ADUs into kind of three categories. Funds that are outside of the equity in the property, have nothing to do with the property. Resources that tap into the existing equity in the property, and resources that lean on the equity that's being created as you build the ADU, because presumably the property is going to be worth more after the ADU is built, right? Most ADUs, I would say, are financed out of a combination of these things. The number one resource people turn to for the bulk of the financing for most ADUs is going to be the equity that they already have in their home, right? Home prices have appreciated really well, so you want to leverage that equity and turn it into a resource that you can use to build the ADU. So if you don't want to touch your first mortgage, we're looking at secondary financing options. We're looking at home equity lines of credit, second mortgages as the primary source of financing ADUs. Depending on how far you can go with that, then people turn to outside of their equity to other resources like borrowing against a retirement account, using credit cards, using family resources, right? Having family pool funds, especially for multi-generational ADUs. If it's going to be, mom moving into the ADU that you're building, maybe mom's got some equity from a property that she's selling that she can chip in, right? So it's outside of the equity in the property where the ADU is being built.
Now we're seeing some products becoming available for ADU financing, like a renovation loan. And also we've seen a product that's simply like a construction loan, but it's at a higher interest rate. So how would you characterize that, or does that change the mix going forward?
I think the silver bullet right now, and there are a few of these products out there and more being developed, is probably a second lien program that is modeled on renovation loan options.
But leaves that legacy note.
Second lien, so it leaves the low interest rate first mortgage in place.
Correct, yes.
Accesses the equity, but because it's modeled on, well, I guess I'll say first choice for simplicity, low cost. We want to do the thing that is the cheapest and the easiest, right?
Yep.
A straightforward home equity line of credit is going to be the cheapest and the easiest, right?
Yep.
You go, hey, I've got equity in my home. There are home equity loan, not very many of them, but a few home equity loan products that will even let you access up to 100% of the equity in your home, right?
Yeah.
So typically it's going to be 80%. If you can get that, then you have basically check writing privileges out of your home equity. And what do they let people do? They have their money available. You start moving dirt and pouring concrete and swinging hammers, and they write you checks and pay interest as they go, as that equity line grows. That's the simplest. But if you don't have sufficient equity in your property to finance the ADU, maybe you haven't owned it long enough, or you already pulled equity out for something else, right? You've done other things. Then back to this silver bullet idea, this product that's going to let you borrow against the future value of your property is going to let you keep your first mortgage, keep that 3% interest rate. These are the programs that I think are increasingly
They're
solution.
beginning to emerge too out there in the market, which is great.
Totally. We're literally, we just like any loan, qualify the borrower for the loan. Make sure they have credit, income, everything looks good for their qualifications to pay the mortgage.
Right.
We look at the property And in this case, we're looking at the future value of the property because it's a renovation loan. We say, hey, house just like this, but with these, your specifications and plans, once those things are done, hey, appraiser, what's this house going to be worth?
Right.
And then we look at the builder because what's going to get us from house today, what it's worth today, which isn't enough to support the loan, point A to point B, where we have enough equity to support the loan, is you. So we have to trust as a lender that you are up to the job and that you're going to deliver in a timely manner and that you're going to build per the specifications and plans that the appraiser is giving us a value on.
Right. Well, thanks, Julie.
My pleasure.
Julee Felsman from Rate, everybody. Highly encourage you to give her a shout. She's just easy to work with and very knowledgeable. So appreciate your time today.
Hey, it was my pleasure. Thank you so much.